All I'm going to say is there's a lot of opportunity between right now, November 3rd, and the rest of 2022. There are some big things setting up in the market. In this video, we're going to cover what those big opportunities are, what to keep in mind going forward, and we're also going to cover some short-term predictions and things to watch because things are about to get crazy. So let's get right into it. So the first thing I want to talk about is the stock market overall, the S&P 500. It has been all over the place over the past year, mostly bearish movement, but we've had a couple decent uptrends sprinkled in. A lot of people are still wondering, when is the stock market going to bottom, right? It's been a wild week and there's still a lot of volatility. And while no one really knows when the stock market will bottom, there is one indicator that tends to kind of lead the market, and that is actually the bond market. For those of you who don't know, the fixed income or bond market is actually a lot bigger than the stock market. So basically, and I know this is pretty boring, but just stick with me for like a minute, right? It's pretty important. Basically, over the past 1 to 2 years, we have seen Treasury yields explode to the upside. Basically, in the beginning of this year, you had the 1-year Treasury paying 0.49% interest. Right now, that same 1-year Treasury is paying 4.7%. That is an insane run-up in just a year for a U.S. Treasury. That is insane. Now, while it is good to see Treasury yields pop up, it is not good to see how quickly they are popping up. By Treasury yields rising, it helps ease inflation, right? But at the same time, when they rise this much, this quickly, it also induces a lot of panic and selling pressure into the stock market overall. So what we need to see going forward, if we want the stock market to bottom, is we need these Treasury yields to chill out and chill out soon. So basically, what we need to see going forward, if we're hoping for a market bottom, is these Treasury yields to either flatline or start to fall a little bit. If they continue to rocket up at the pace they currently are, that will make it very hard for the stock market overall to rise up. That'll put a ton of selling pressure onto the market. And while Treasury yields will probably not, or no, they're not going to fall back to the levels they were at in the beginning of this year, it's okay if they just flatline because it'll calm down a lot of the investors that are selling off because of the opportunities they have in the bond market. So that's the boring stuff to keep in mind. To follow Treasuries, you can go to like CNBC.com and then click on like the bonds tab and you can follow all the different durations. It's a pretty easy way to check it, but keep that in mind. Another important thing I want to mention is this data set right here that basically tracks the percentage of S&P 500 stocks above their 200-day moving average. Basically, we can see throughout time, this data set tends to be very mean reverting, and it always bounces between 10 and 90. When this data set is at 10, it means only 10% of stocks in the S&P 500 are above their 200-day moving average. At the same time, when this data is above 90, it shows that 90% of stocks in the S&P 500 are above their 200-day moving average. This indicator has been very consistent throughout history with calling market bottoms, right? Of course, it doesn't time it perfectly, but it does a pretty damn good job. And basically, we can see it always fluctuates between 10 and 90 until it goes back and forth. When the data is closer to the bottom end of the range, closer to 10, 20, or 30, the stock market tends to do pretty well going forward because it shows how many stocks are, just sold off in the S&P 500. So keep that in mind as well. Right now, this same exact data is at 32. It's not the lowest we've ever seen, but it is pretty low when you look back throughout history. And like I said, most of the time when this data is low, we do see it pop back up. So keep it in mind. We've been talking about this data for a couple weeks now, when it was even lower, closer to 20, and the stock market has popped up since then. From my experience, this data is pretty useful. And if you want to see it on TradingView for yourself, type in S5TH. Like I said, it's pretty useful. Another thing I want to talk about are the big events we have going forward in the market as a whole. So as of today, November 3rd, it's been a crazy past couple weeks with Powell's interest rate hike and all the crazy earnings that happened. But the volatility is not set to slow down anytime soon. Next week we have the midterm elections, which that brings in volatility. But later, or actually tomorrow I should say, we have unemployment data, and then next week, like I said, we have the midterms, but we also have inflation data coming out, which is so so important for the stock market, the bond market, and the economy as a whole. Inflation data is so important. That comes out Thursday, November 10th, right at market open, we could say. Another important thing next week is we have consumer sentiment readings. That's also pretty important. And then as the weeks go on and as the year gets closer to an end, we have another FOMC meeting. And of course, we have all of the economic data that we normally have. And this is only like the big events that's scheduled. A lot of times the big market moving events sometimes come out of nowhere, So keep in mind, like, just on the economic calendar itself, there are some pretty big events going forward, not only for next week, but just to the end of the year. And then, like I said, this is not even including what we don't know yet. So that's pretty big in that sense. So definitely keep that in mind. One other thing I really want to point out is that while the stock market is showing a little bit more strength than it has been over the past year, I think the most opportunity between right now and the end of 2022 will come in specific industries that have specific catalysts going on. For example, with midterms coming up, we have a lot of talk with the marijuana stocks. Over the past couple weeks, and honestly like the past couple months, these marijuana stocks have been holding up a lot better than most other stocks in the market, and they've been holding up better than just the market overall. If you look at a popular marijuana stock like TLRY, it's been doing pretty good, So what I'm saying is specific industries will likely be where the most opportunity is. The SPY right now, the market overall is still kind of choppy, and there is volatility, and that's a good thing, and that does present opportunity. But I think there will be even more opportunity in specific industries. A couple examples would be like how we have marijuana stocks going into the midterms, and just the end of the year and how low they are, and then also some potential legislation that might be passed in favor of these marijuana stocks. So keep them on your radar, like TLRY, CGC, ACB. I think another one is GRWG. There's like ETFs like MJ and MSOS. Every now and then, these stocks go absolutely crazy. Most of the time, they just slowly fade down, like we've seen with Tilray. It just does nothing for like most of its existence, but then every now and then, it just has like a complete jaw-dropping run-up. We could see in 2021 in February, Tilray basically went from like $8 up to $65 in like a month or 2 months. Absolutely crazy. Also, again, in 2018, Tilray went from 26 all the way up to 300. Every now and then, they go absolutely crazy. Keep them on your radar. Most of the time, they do nothing, but a lot of times, or in rare situations, they explode quite a bit. Some other examples of specific industry opportunities might be with these cruise lines. Carnival Cruise Lines is actually at the lowest level it's been at in like over 30 years. It has all-time highs of around 72. Right now, Carnival Cruise Lines, CCL, is right around 9. It's probably not going to get back to its all-time highs anytime soon, but that doesn't mean that it can't have a nice pop back up closer to like 18 or 20 or 16 or something like that. So keep an eye on some of these industry-specific opportunities. Marijuana, cruise lines are good examples, and then just other things as news unfolds. If we have any big news with like oil stocks, that can also be a big opportunity to the upside and the downside. So keep in mind, industry-specific opportunities will probably be the best going into the rest of this year. It doesn't mean you have to buy marijuana stock. That's not what I'm saying. But what I'm saying is look to trade industries rather than the SPY overall, especially with any news or events that happens. Another thing I want to talk about is just I guess you could say, performance check-in for the year so far. If we look at the performance year to date for the S&P 500, we can see it's quite the I guess you could say view here. We have some stocks, like the oil stocks, up 82%, while at the same time we have Apple down 20%, Google down 41%, and then Meta down nearly 75%. A lot of times what we see every couple months or so are like rotations and just like normalizing returns, if that makes sense. So for example, let's say we saw oil stocks absolutely outperform the market in a huge way over like the past couple quarters. A lot of times in those situations, we would see oil stocks underperform the market going forward, and you can say the same thing to the downside. So for example, if we look at, I don't know, let's say we look at Meta. Right now it's down 75% year to date. Clearly, it's underperforming the market in a gigantic way. Given that has been the case for the past year, a lot of times we see like a return to the mean, or just like, just like normalizing occur, where some of these stocks that are down the most will actually hold up better than the market going forward. And then some of these stocks that are oversold or overbought and that are up too much will actually have worse returns going forward, if that makes sense. So if I confused you guys, sorry, but the main thing to know is like the overbought stocks we're seeing right now have a good, it's easier for them to fall, and then the oversold stocks right now, it's easier for them to rise. So if you look at some of the most oversold stocks in the market right now, assuming they are good companies, those stocks will probably hold up better going forward than the stocks that are already up, if that makes sense. So I'm pumped for the rest of the year. I think there's gonna be so much opportunity. We got like 2 months left. There's gonna be, of course, tons of volatility. That's not going to slow down anytime soon. But I'm also very excited for industry-specific opportunities like the marijuana plays that I mentioned. I think it's going to be crazy. Thank you guys so much for watching the video. Make sure to subscribe if you're new. I post brand new videos every single day. And check out this video on the screen right now. It goes in depth on how to capitalize off of Meta stock right now and its historic move.